welcome back. We've got Mr. Srinivas Sadu, the Managing Director of Gland Pharma, with us as well now, and all eyes on that big IPO. Mr. Sadu, thanks for joining us. First, just introduce the company to the viewers. Tell us a little bit more so that we know what to look forward to.
So this company is almost more than 4 decades, right? I mean, started in '78, being a boutique contract manufacturer till about 2000. That's when we changed the direction and said, with all the quality foundation laid till that time, how can we leverage that to build this company around quality manufacturing and portfolio? That's how we set out a goal of becoming a global generic injectable player. So we are a focused injectable company. And we have created massive manufacturing infrastructure in the last 20 years. There are a lot of investments came from private equity over the last 20 years. In portfolio-wise, we have created a large injectable portfolio across several therapeutic areas. Biggest market for us is US. Almost 67% of revenues, if FY20 came from the US. We're selling products in more than 60 countries, and we're launching more. So we're expanding facilities now. We're expanding portfolio to other geographies. So we have a big growth plan in the future as well.
Okay, the current portfolio has a wide range, in fact, of injectable technologies, well positioned in China as well, relying on Fosun's regulatory. Tell us a little bit more about that.
So the goal, what you said in 2000, we continue to work on that. In injectable space, unless you have technologies in different delivery formats, you can't really dominate that space because unlike other dosage forms, injectables comes in different delivery formats. So when we have started our journey in 2000, we started with a couple of lines with 1 or 2 technologies. Today we have covering most of the delivery formats which kind of dominate the space. There's still more to go. I mean, we are working on complex injectables as well. And with Fosun coming in, if you look at the generic injectable space itself, worldwide, it's almost $130 billion market. And the products what we have launched in the US is going to cost about 8 to 9 billion, right? So, and the US dominates almost 40% of the total market. And still a lot more to do in the US. In other geographies, if you look at worldwide, the second largest is China market. We are planning to enter China soon. We have an ambition of becoming about top line coming from 10 to 15% from China in the future. So 2/3 of actually world generic injectables come from these 2 countries, US and China. So we started our journey into China. We started filing products there. US will be the focus market even moving forward, but other geographies also are increasing. Like I said, we are selling in more than 60 countries. India also is a big chunk, almost 18% in the B2C business. We sell to hospitals, all the critical care products. Yeah, you might have heard about heparin, which is one of the key hallmark product of Gland. We're leaders in this space in India. And during COVID, actually, heparin has become it's a blood thinner. It's a big product as well. So we have a portfolio which covers across all therapeutic areas, which covers all our bases. So irrespective of how the market is, we kind of growing. So that's one of the reasons why we have been growing for the last 15 years consistently.
In today's day and age, it has to be noted that you've exhibited impressive compliance track record. Tell us, how do you plan to maintain this?
I would say different things we do. If you look at our history, right, we have started this company in '78. We focused on injectables. We never got into other dosage forms. Sterile products is a different ball game altogether compared to the solid oral. So we stick to that. We don't want to diversify into other areas because a lot to do still in this. The quality culture established, because we always tell our people, if you can't deliver quality products to the patients, then we should not be in this business. And that's the culture we have adopted. And we get a lot of, because ours is a B2B business, so we work with the big pharma companies. You name a company, in the front-end companies in the US. We work with most of them and we have established a relationship with them. They continuously audit our sites as well. So while 1/3 of our employees are on the quality side, so that also is a key thing. So while we have a quality culture, quality foundation laid, historically, we are focusing on sterile. We don't have different quality systems for different markets. It's one quality across the globe. And while we are okay with losing some business in some markets where we are not able to compete, but still we are fine with it. We want to continuously do that. So, several things, and I think the quality folks here know exactly what is expected out of them, because this is what we are here to do.
Tell us about what is the opportunity that you sense in small molecule injectables when it comes to generics?
The opportunity is huge. Like I said, almost 130 billion in generic. Last 5 years, if you look at almost $30 billion products have gone off patent. We are focused on generic injectables. Next 5 years, almost $60 billion products are going off patent. The molecules what you have launched in US only covers about $8 to $9 billion. And so there's a lot of opportunity in the US, even products what you already launched, already genericized, and also the future products which are going off patent. So there's a huge market out there. So that's why we invest a lot into R&D every year. We file about 20, 25 NDAs. Then our model itself is a little different. If you look at, there's no like peer in the industry. We are unique in this. We offer services in different kind of models under B2B space. Except India, we always offer products for other companies. We're like a go-to company for a lot of big pharma companies whenever there's a need. Even during COVID, the big pharma came to us for some volumes because they couldn't really generate those kind of volumes in their sites. So that's how we've been growing our business, while we continuously create a portfolio to across therapeutic areas to cover all your bases. And we also work closely with our partners to grow this business.
Okay. Most of the key products are showing volume growth, and we take a look at the company. There is also room for penetration in certain brands. So talk to us about that and really where you see the opportunity going forward.
Absolutely. So, if you look at our strategy, right, if you look at the numbers, our top line has grown almost 28% CAGR in last 3 years. The new products have helped us to grow by about 10%. The rest of the growth actually has come from the older products, about 13, 14% or 15%. So the model itself is helping us. The key thing in injectable space is how much throughput you can get from this manufacturing side, so that you can keep your costs down, so you're more competitive, so that you can get a larger market share. And also by doing that, you're also able to penetrate into other markets because you're becoming more competitive. So we focus a lot on the older products, unlike a lot of players. While we launch new products every year, which is giving a growth, we also focus a lot in terms of life cycle management, how to add a second supplier of API, how to look at other cost saving measures. So we are, and also the throughput we give, because you're offering services to multiple players, we churn out a lot of volumes. Our capacity, almost we do about 400 million on normalized basis units per year. That's kind of keeping our costs down, and that is helping us be competitive in most of the markets. So that's how we're able to grow our business in different markets as well.
Sure. Strong EBITDA margins at 39%, ROCE at 26% as well. That's higher versus the industry. Share with us some of the factors behind that.
I think it all depends on how well you manage your capacities. Capacity utilization is the key in this. In injectables, almost 85 to 90% are fixed costs. So your per unit cost will come down once you start leveraging these capacities better. So what we're doing now is because of a model, we have a three-pronged strategy for the model, where we do contract manufacturing services, we do a tech transfer, where companies develop the products and transfer to our sites, and we have our own products which we develop. So we're able to make more units in a line. And the same site, when we started the plant where you're sitting today, this plant we started 2 lines. Today we have about 14 lines. Across sites we have 21 manufacturing lines. So large throughputs we give. And so once after a particular state, then the bottom line increases drastically, because of cost of fix. So that's what the thing. And the complexity is, while the throughput is increasing, you have to maintain that quality. So the balance between these two is a difficult thing. And that's why it's a lot of entry barriers in this space. People cannot come and start dominating this. Every delivery system, when you enter, you have to have that expertise to do it. It takes about a couple of years to get that expertise to get your best cost structure. And that's why we are ahead in terms of other injectable players, because we've been in this business for the last 40 years.
Okay, Mr. Srinivas, we'll let you go at that, and all the luck for the upcoming IPO.